Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. We had some early cash talks. How is that going to set the tone for the market? And is it too early as a Wednesday when we're doing Cattle Call? There hasn't been any takers on those bids. We'll also take a look at what's happening with the recession in the cattle market. And is there a break coming in the box beef? Coming off the 4th of July holiday, did we see some meat moving across the counter? Maybe a little bit better than expected. Lots to look at today on this week's Cattle Call as Brad Kooima joins us. He is with Kooima and Varlick out of Sioux Center, Iowa. So let's start out. I'm curious because we saw on a Tuesday some bids that popped up a little early. Haven't seen any takers as of this point. What's your spin on what's going on?
There's been, a little early week. I guess it isn't quite as early as it feels like because we didn't have markets on Monday. But a few bids have been floated that are a little below last week's level, Susan. And so far, there's been no takers, which I'm glad to hear. You know, you always worry a little bit about, some, leakage or some weak need, or I guess I should be careful how I say it, but, you don't want to see these guys worrying too much that oh boy, I just better sell the cash cattle like we had to do 2 years ago, right? Whenever you got a bid. I'm glad that there's a little more resolve. Now, that there's going to be some incentive by some of these hedgers that, with the basis as weak as it is, with the futures this much discounted to what the cash is, that you're always afraid that there's going to be some leakage and that the packer's able to buy these cattle a little cheaper than he maybe would have to. But so there was some 145, 6, 7 bids in this area. Last week, the cattle that I fed in Nebraska, we brought 148. The cattle in Iowa I sold at 150. There's been some 234 bids floated too, which is a little bit less than last week's bids from a couple of the majors. I think that we're going to get back to fully steady. At least that's my expectation. At least if you got that good kind of cattle quality that we do in the north, with the choice select spread still big and the box beef still pretty strong. Packer still wants to kill some cattle, and I think if we have just a little bit, bow our neck a little bit, I think we'll get fully steady again for sure.
All right, so you brought up that box beef. Are we going to see it break anytime soon?
Well, if you listen to everyone, they're positive we are, right? I mean, we're talking about it for 6 weeks, right? I think since Mother's Day. Today, by the way, it was up $3.85, so not too bad, right? I mean, we're only a couple of dollars off of the spring high on the boxes. I say it tongue in cheek, try to be funny a little bit. If we don't go down in the summer, it is very unusual. Okay. Last year was very unusual. And we think, and I think at least it's because of the dynamic that was the COVID pandemic, the whole pandemic thing, where you had restaurants closed 2 years ago. A lot of people were forced to learn how to cook their own steak. I mean, I know you and I do it year round. At least I certainly do it year round. I don't care what the weather is. But there's a lot of the public that doesn't, and the generation that's younger than me. And that was the interesting thing about last summer. We kept waiting for, we're going to have the summer doldrums, right? It's going to be hamburgers and hot dogs. And yet the middle meat stayed pretty solid all summer long. So far, they've done the same thing this year. Now, I understand that from talking to some of the guys in the meat business that I visit with, the business over the long weekend was excellent. And some of that's because of weather, especially on the coast where, what is it? The statistic, 92% of the people live within 100 miles of both coasts or some wild thing like that. So with good weather, they went out and they grilled their hamburgers, but they also grilled their steaks. And the hamburger demand has been almost unsatiable. I've got people that are cow killers that I know that say, half the time we're shorting our customers because we can't get enough product into the chain form. So I have trouble when people just write off demand. I don't see it right now yet. The demand is very, very good. Now we'll take this a week at a time, of course, but demand so far is very good. Part of the market today, I hesitate to bring this up because it's kind of rumor and innuendo, particularly when China is mentioned in the sentence, but there was some talk that there was some renewed business to China today, both in the hogs and the pork, or hogs and the beef. So if you look at how the hogs traded, you'd say, well, something certainly was going on the last 2 days, right?
Is there any recessional fears, though, going on for this market?
No question. And I don't want to discount that or pretend that it's not real. In fact, I think a lot of us believe it's already started, right? We've already had some impacts of what is a recession. Now, one of the things here, and this is over my pay grade, I'm a cattle guy, right? But I do try and listen and to some of the people that at least can dumb this economic type dialogue down to my level of thinking. But a couple of things here that are going on that make me a little encouraged that hopefully this recession is mild. A lot of people have compared this to 2008. Boy, now I hope they're wrong, because 2008 to me was way different. I mean, you had, remember, Bear Stearns, Merrill Lynch, you had financial institution after financial institution upside down because of the housing market crisis. I mean, it was a big, bad deal. And I just don't know that sector or that kind of depth here is what we're talking about. We've got a big time inflation problem. Yeah. But again, choosing to be a glass half full person, Susan, crude oil is $24 off of the highs, 20%.
Mm-hmm.
And I don't know, we're not seeing it at the gas pump yet, but okay. You know, I went on a rant yesterday with someone else about retail beef. Okay. I get this weekly retail beef thing, you know, sirloins, ribeyes, hamburgers are all less than a year ago. Don't give me this baloney that everything's that much higher than a year ago. They're not, you know, so if we could do something to slow up this inflation, then the Federal Reserve isn't going to have to crank on these interest rates near as bad, right? And then maybe this recession dip is mild and moves on. So we'll see. You know, what happens in November is going to be a factor too, I would believe. But yeah, let's not get political here, right? I'd like to believe that because of the discount structure in the market, a lot of that what if negative, you know, recession talk is built in. You know, you've got a big discount already on the August and October cattle.
You and I last week were talking about how tight the cattle were in the north and having to do some purchases from the south to fill. Are we still kind of in that same boat right now?
It's the giant sucking sound of cattle getting pulled up from the south up here to Nebraska, right? Yes, it's still going on. A couple of the majors in particular with thousands and thousands of cattle being exported out of Kansas, especially into Nebraska, but even in some cases all the way from Texas. Now, that's one thing. The freight is a bit of an issue, but, you know, I don't think it's $8 freight either, at least unless you're way down in South Texas. So freight is an issue, but, you know, there is a limit to how much they can do of that too, Susan, because of the quality. You know, generally speaking, the grade of the cattle in the north year round are higher than the south. And they certainly are right now too. And so Packers got a little bit of a dilemma, you know, just how many of those poor grading cattle he has to pull up here. But the north is, to me, we are as tight as we were in 2014. We have cattle. I don't mean to imply that we're out, but we've got cattle about 30 to 45 days pulled ahead, and that sure helps with leverage, because then you can say no once in a while to a bid that you're not crazy about.
Well, as we wrap up, let's quickly talk about this cattle hog spread. We don't usually talk a lot of hogs on this show, but obviously there's some correlation going on.
Yeah, it mystifies me that there are some fund-driven algorithms that actually trade the cattle hog spreads of all the things to be involved with. And so I was trying to understand why yesterday the cattle performed so poorly until I was told that there was a large algorithm that was sideways or wrong. They were short hogs and long cattle and blew out. And so they were forced then to buy hogs and sell cattle. There was a degree of that, I think, today that maybe limited the upside of cattle, even though we had a nice solid update today. But yeah, there's some, on a daily basis, it's weird. There are things that are very difficult to explain exactly. Why did we do this today? And often, unfortunately, the market has now deteriorated to whatever the last gyration of the majority of the funds are is what impacts the market more than the daily fundamentals. But at the end of the day, we'd all like to think that the fundamentals are right?
Exactly. Thanks for joining us this week, Brad.
Sure.
All right, just a reminder, folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's today's Cattle Call on the Rural Radio Network.